ICD and Refinitiv are pleased to launch their 8th consecutive Islamic Finance Development Indicator report, titled Progressing Through Adversity. The Islamic Finance Development Indicator is the definitive barometer of the state of the Islamic finance industry, with rankings provided for 135 countries around the world. The Islamic finance industry continued expanding its global footprint and registered a double-digit growth of 14% in 2019, taking the industry's total global assets to $2.88 trillion. The growth was primarily driven by growth and transformation in Islamic banking, unprecedented growth in Sukuk, and continued regulatory support. The report opens with an overview of the key asset classes in Islamic finance. Islamic banking is the biggest asset class in Islamic finance industry and has been growing by 5% on average since 2012. Islamic banking total assets has reached close to $2 trillion in 2019, growing by 14% from 2018, and has a market share of 6% in global banking assets. The industry has a total of 526 Islamic banks and windows. The second largest asset class is Sukuk, a market that has been witnessing a tremendous growth since 2012. Sukuk outstanding maintained its solid performance in 2019 to reach $538 billion, recording nearly 13% growth. A total of 3,420 Sukuk were outstanding by the end of 2019. Other sectors covered by the IFDI include takaful, funds, and other Islamic financial institutions. Takaful total assets reached $51 billion by the end of 2019, registering 10% growth in assets. Other Islamic financial institutions' total size reached $153 billion and has grown by 6% in 2019. And Islamic funds market has reached $140 billion, registering the highest growth in 2019 compared to the last 10 years of 30%. Measurement of the development of the Islamic finance industry goes beyond just measuring core business components such as financial performance. Governance provides an important indicator of the health of the Islamic finance industry's infrastructure. By the end of 2019, 1,170 Sharia scholars have been serving the industry, and 14 countries have central Sharia boards. There were also 45 female Sharia scholars representing Sharia boards. Islamic knowledge evaluates the skills and education required to enhance and grow the industry and is measured through education and research papers. By the end of 2019, 972 education providers and 379 degree providers have continued to develop Islamic finance professionals to support the industry with much-needed talent. The IFDI also measures CSR, corporate social responsibility performance, through disclosed CSR activities and CSR funds disbursed, and awareness, which is measured by assessing 3 components: conferences, seminars, and news volume. Islamic financial institutions disbursed $1.16 billion in CSR, out of which $1.03 billion were in zakat and charity, and $129 million in Qard al-Hasan. Islamic finance had 463 events in total in 2019, which consisted of 143 conferences and 320 seminars. So far in 2020, the market has continued its transformation journey and have witnessed key development in areas such as digital solutions, governments turning to Islamic finance for diversification and economic support, and fostering the development of ESG and sustainability.
At ICD, we are proud to continue our partnership with Refinitiv in producing the Islamic Financial Development Report. The report provides an independent, analytical, and empirical grounded discussion of major development in Islamic financial and surrounding ecosystem. Since the indicator introduction in 2013, it has played a key role in serving policymakers and market practitioners around the world who require reliable and comparable information to better understand and analyze the opportunities and challenges in the Islamic financial space. The indicator also designed to assess how well the industry has been in its religious, economic, legal, and ethical values. We believe that the analysis and information provided in this year's report will serve as a vital reference point for the state of Islamic financial industry during these difficult times, and we remain convinced that the Islamic financials can play a major role in alleviating the social and economic consequences of COVID-19 pandemic. The development of Islamic financial is a key objective to ICD. And in this respect, we are happy that we have rolled out several key initiatives, including a $250 million emergency fund to support the member countries against COVID-19 pandemic, which is part of the $2.2 billion ISDB emergency fund for COVID-19. Number two is launching ICD Global Council platform called The Bridge to be the future cloud-based next generation, full-featured networking and fulfillment platform for the benefit of our network of 119 financial institutions worldwide. Third, launching the ICD Refinitiv Award 2020 to recognize and showcase and encourage financial institutions that provide an outstanding solution for the financial industry. Fourth, under the slogan of the financial inclusion as one of the objectives of the Group of 20, G20, ICD developed the Smart Financial Transactions platform with an objective of raising awareness among its women and youth regarding the importance of financial education and motivating the targeted group to practice healthy financial habits. 5 is announcing the successful completion of our pricing of a 5-year, 600 million Sukuk issuance that was 3 times oversubscribed. We hope that you will benefit from this year's Islamic Financial Development Report, and I wish you all the success.
The past few years have been exceptional for the Islamic finance industry. In 2019, we saw the industry grow by 14% year on year, the highest growth that has been achieved since the global financial crisis. And total assets hit nearly $2.9 trillion. And what was particularly heartening is that this growth is not being primarily driven by Islamic banking, but we see other segments contributing, including Sukuk, which grew by 15% year on year, and Islamic funds, which grew by a whopping 30%. What is even more encouraging is that in 2020, when governments and corporates are dealing with the impact of the COVID-19 crisis, we see more and more entities turning to Islamic finance, particularly to Sukuk, as an instrument to help meet their fiscal and funding needs. We expect Sukuk this year to hit, if not exceed, the record that was set last year in terms of new Sukuk issuances. And we expect with that for the first time, the Islamic finance industry will break the $3 trillion mark in terms of total assets at some point in 2020. We hope that you will find this report and the insights and analysis inside it useful, and we hope that it will help you to continue to guide your institution's strategy within the Islamic finance space.
For the last 8 years, our indicator has been providing insights and deep market knowledge to help financial institutions and policymakers to drive performance, innovation, and take big ideas to big results. This year's indicator analyzes the performance of 1,500 financial institutions globally in 135 countries, as well as looking and analyzing the performance of the ecosystem of the industry, such as regulation, CSR, and knowledge and awareness. In the past few years, Islamic finance industries has been one of the fastest growing industries globally. One of the notable trends that we have seen last year was the growth in Islamic funds, an industry that grew by 30%, which is the highest historically. And we expect the performance to continue next year as investing in Sukuk and ESG continue to drive the market. Another trend that we have been witnessing over the years is the increase in number of women Sharia scholars globally, a trend that has started initially in Southeast Asia and continues to spread across the world. The pandemic has also been a game changer for a lot of Islamic financial institutions who started offering their products and services through a digital channel. Ladies and gentlemen, we hope you enjoyed the report. Thank you.